Hello and welcome to BQ Prime. I'm Monal Sanghvi, and today we're going to be discussing about a space that has been buzzing, diagnostics in particular, which has been in focus because of a report released by Nuama stating that the online players that were originally resorting to predatory pricing are now settling and taking consistent price hikes, and it's not a one-off anymore. We also have a very special guest joining us in today, Mr. Rahul Guha, CEO of Thyrocare, joining us to tell us what's actually happening on the field. Welcome to the show, sir.
Hi, Mona. Pleasure to be on the show.
So there's news that a lot of online players are hiking prices, and that is going to ease out the pressures on pricing in general and improve profitability and margins for diagnostic players, in turn turning out to be positive. Do you believe that's true?
Actually, on the ground, Monal, I do believe that's true. I do believe competition on the basis of pricing has definitely eased off in the last couple of quarters. In fact, our parent company, API Holdings, that also works with Pharma, which is our largest customer from amongst the online players. We've been reporting, you would have seen in the last quarter, the year-on-year price increase on the Pharma platform has been 18%. So definitely all the online players have felt that this burning model is not sustainable and have pulled back from that strategy. However, that doesn't mean that the competition has stopped. It is just that the competition on the basis of price has stopped. The players have still not vacated the market. I don't think anyone has exited the diagnostic space, but there is definitely rationality in how we think about pricing. I think the competition will now shift towards who offers the best customer experience, who offers the best quality testing, who offers the full menu of tests with the appropriate accreditation and all of that. And I think that is overall very good for the industry as well, because as more and more consumers and patients become aware of the benefits of good quality testing, I think the industry as a whole benefits as well.
True, sir. So if I were to understand correctly, we've, as a company, Thyrocare has taken an 18% hike, or is it more than that? And are you expecting...
No. Just to clarify, I was talking about Pharma, which is one of our partners on the Thyrocare platform. Thyrocare, we have always believed in keeping prices low for the end consumers and ensuring that everyone in India has access to affordable, good quality diagnostics. That's our mission. So we have always kept prices low and will continue to keep prices low for our customers and patients.
Okay, sir. So there's no idea of ever hiking prices right now. I mean, from current levels, even a 4 to 5% rise, because a lot of players have corrected.
We took a moderate price hike in the last quarter, and that was after a long period where no price hikes were taken. But I don't anticipate our growth to be led by price. I anticipate our growth really to be led by volumes. As we penetrate deeper and deeper into India.
And so with a lot of players now, it being more of a fair play, what sort of volume expansions are you expecting? Because when there was a lot of price competition, we saw a lot of players capturing market share based on these predatory pricing methods. So do you believe that with that settling down, what sort of market share division would happen? Historical players like you and a couple of others that have been listed and in the market for quite some time, do you all stand to gain more, or these online players will retain their share? What is your sense of this development?
I think you'll have to bifurcate the market a bit, Monal. I think the first is all the online competition has largely been concentrated in the metros and tier 1 cities. Actually, the penetration beyond metro and tier 1 is very, very small for the online players. So I think the large amount of the price competition also was centered around the metros. As you go outside of the metros, the volume growth has been quite good and continues to be quite good with stable pricing. I think in the metro cities is where you saw a lot of this price competition and share moving from one player to the other, which I think has now got rationalized. And also you see a big movement of back from online to offline as well. So I think the tailwinds are good for players in the metro side because pricing has rationalized. No longer Are you in the discount game? And having a good offline presence does give a boost to the overall business, as patients also start to come back to the stores and get more comfortable with walk-in and the like. I think in tier 2 and beyond, not much has changed. I do believe that market has not seen the kind of price competition that the metros saw. And I think that place has been quite sustainable. For Thyrocare, actually only about 15-20% of our business comes from the metros and tier 1. Most of our business comes from tier 2 and beyond. And we are seeing good volume growth in those areas.
So also then I'm going to extrapolate here a little bit and ask you of how these online players are they looking at even moving to tier 2 and tier 3, or is it only the offline players that are present there? And in the metros, if I were to ask you, what sort of difference in terms of footfall have you noticed? People, like you said, are getting more comfortable with coming back to diagnostic labs and getting their tests done. So what is the kind of increase in footfalls that you've noted?
So let me try to answer the question with the facts that I have on my hand. If you look in how we report our business, we report our franchise business and our partnerships business. Our franchise business is largely our offline business. Our partnerships business is more or less our partnerships with the online players. I would say our offline business, as we reported last quarter, grew at about 20%, 18% year on year, whereas our partnerships business actually degrew. So I would definitely say there's a clear trend of moving offline, even in the metro cities.
Okay, so with price not being a decisive factor anymore, I believe you all do stand to gain. Also, sir, when it comes to packaged and bundled services that Pharma on its app offers through Thyrocare, and a couple of other players also that are online as well as offline, have we seen any rate hikes there? Because bundled services, I believe, are the next thing where a lot of customers are opting for. So what is the sort of response that you witnessed on that side?
No, definitely. I've seen in single tests as well as in bundled offerings. Okay. Actually, if you look at most of the online players, I would say almost 80% of their business would be bundled offerings. And that's where the majority of the price hikes have taken place.
Okay. And so if you could give me some range of the kind of price hikes that were seen.
Oh, I think it's reported in the report that you mentioned in the beginning also. It has been, I think, from 15% all the way to 50% is the kind of price hikes that we've seen across many of the aggregator-based platforms.
And so what is in general your outlook on the upcoming quarters now with these sort of positive changes taking place in the entire space?
I think overall, I do believe that the notion of good quality testing has come to the forefront for most of the patients and customers. So I think there is definitely a strong secular movement from unorganized to organized, which of course benefits many of the chains. And I think that's wonderful because it benefits healthcare outcomes as well.
Yes.
The other is, I do believe wellness testing is very much at the forefront. More people are getting annual health checkups and regular checkups than ever before. But I would also like to talk about Janch, which is our sickness packages, where we have bundled tests depending on different illnesses and created packages around that. That is doing very well for us. In fact, our fever packages have been almost seeing week on week a doubling of the volumes as we get into the monsoon, just the fag end of the monsoon season, and then into dengue and malaria as we move into the next quarter. So I think there is also a paradigm shift from just annual health checkup wellness to wellness at a holistic level, where you might be sick with something and really getting to the right root causes. And I think our Janch packages are very well positioned for that.
So now I'd like to ask you something more specific. well, in Q1, we had our net profits that were down 20% and EBITDA was also down by 5%. Our margins also came in a little softer as compared to last year. So do we expect these to inch up in Q2 now with, like you mentioned, seasonal illnesses coming into picture and also easing out of competition, that which is the overall positive scenario for the industry? So do you expect that it will now be better and just keep improving for the year?
See, it's difficult for me to give specific guidance so close to the end of the quarter. I do believe I can speak at an industry level.
Yeah.
I do believe many of the tailwinds that you talked about are definitely in the right direction. And I think as an industry as a whole, I do believe that we should be doing better over the next few quarters.
Okay, sir. Thank you so much, sir. This really helps give us an insight and outlook on what's happening in the space. The report highlighted quite a few points of how we will be also doing an exhaustive story on the same. Thank you so much, sir, for joining us today. This is BQ Prime.